Hello guys, it's Monday, new week beginning, and we are very close to Christmas. So just a heads up, the market may be starting to slow a little bit down as the big banks, big corporations are getting a time off. But remember, as I've mentioned last week, don't be, how can I say that? I'm not trying to say that stop trading. But if you have an opportunity, then go for it, all right? Please guys, subscribe to your channel, give us a thumbs up. Just, a weekly run over here. Tomorrow we're gonna have the webinar, tomorrow we're gonna have the webinar as usual, from 6 to 7 p.m. on Sydney time. We're gonna discuss everything that you guys like to do, as well my pick three positions for, coming now to 2024. Right, so what we're gonna have as big impact for this week. First of all, tomorrow, Tuesday, we're gonna have the RBA minutes. It's gonna be 11:30 a.m. On Sydney time. As well, on Tuesday, we're gonna have Europe CPI. Remember that the last Europe CPI was revised down, okay? So it was revised to 2.4. And the consensus for year over year, it is to 2.4 as well. So basically they've revised it to 2.4 and now the consensus is 2.4. So they don't think it's going to have changes on the CPI. To be honest, to be fair with you guys, I do think that we may have a slowdown on the CPI on Europe, okay? Not that they are having a how can I say that? Not they are very well controlling inflation, but it's naturally how the things work on economy. We're having lower retail sales, we're having bad PMIs, manufacturing services PMIs. So, in the main picture, the big picture, everything works down for a lower CPI, okay? A lower inflation year over year. So that would be everything for Tuesday. Now heading up for Wednesday, we're gonna have UK CPI. Now, last UK CPI year over year was at 4.6%, and now we are expecting 4.4%. So the consensus has dropped by 0.2%. So that means that inflation is heading down on UK. My opinion on this news. Fair honest, I don't think we are heading that much down, okay? We may be as expected or 4.3, not too much lower, okay? I don't think it's gonna come higher because, the Bank of England, it is doing a very well, meticulous job on, controlling inflation. And I guess they will continue to do that in 2024. But for that, I don't think any other rates hike will come. I don't think any other, surprise will come. More towards a cut from the Bank of England. And this, of course, what I want you guys to understand is who's gonna cut first. Whoever cuts the rates first is gonna have a very weak currency. Whoever still holding, is gonna have a stronger currency, okay? Basically, the reason behind it, just going through it, I'm gonna explain this tomorrow on my webinar for 2024, so stay tuned, is that we're gonna have, let's say, Fed. Let's talk about US. Let's say Fed and RBA, okay, Australia and US dollar. If RBA cuts first, then everyone that was invested on Australian dollar or fixed incomes in Australia will lead this money. The FDIs, foreign direct investors, will lead this money to US because US is paying higher rates now than the RBA. All right. Anyways, I'm gonna dive deep on this one tomorrow. Now Thursday, we're gonna have consumer confidence for US at 2 a.m. in the morning for me in Australia time. Then on Friday, we have holiday on New Zealand, and we're gonna have the GDP for US. Quite frank, I think it's gonna come a little bit higher than expected. Okay, it's just crazy how US is so resilient right now, especially the US dollar have been so resilient right now. And even with those dovish rhetorics from the Fed, it's still very resilient because the economy is resilient. So kind of feel like that the market is, not that the market is not caring about what the FOMC is saying, but the market is looking at two things, right? The market is looking for the Fed, and the market is looking for the actual data that is coming, like PMIs, very good PMIs, manufacturing and services. Consumer confidence, if consumer confidence comes higher, if the GDP, the gross domestic product, comes higher for quarter over quarter, that, yes, I know, I remember, and I've told you guys that Jerome Powell has said that they are expecting a little bit higher for quarter 3, but on quarter 4, May is low down. All right, so this is why I'm expecting a little bit higher, stronger numbers on the GDP. This will lead for a little bit stronger US dollar. I guess for this week, we're gonna have lower euro dollar, lower pound dollar, higher USD JPY, okay? I think this week we're gonna have a stronger US dollar. And we're gonna have the GDP as well for the UK. And then on thing, you know, to finish everything, we're gonna have core PCE price index for US as well as the new home sales. So that's gonna be basically the week ahead. Again, I do think the US dollar will be a bit stronger this week compared to last week. We did have a much weaker US dollar, you know, for many reasons. Lots of data is coming from US as well. All right, guys, so that's all from me. I see you tomorrow on my webinar. Just remember, it's free, $0, no charge it. You know, send to a friend, come and join us. It's gonna be very, very good. Subscribe to our channel, share this video with your friends, and I see you in the next day.